A lot to get into there, but we do begin this hour with that breaking news about your money. Just seconds ago, the Federal Reserve cut interest rates for the first time since the beginning of the COVID-19 pandemic. The Fed is now reducing rates by 0.5 percentage point after raising rates or keeping them steady for years before this to combat rising inflation. Everyday essentials like food, gas, housing are still expensive, as you know, but the increase in prices in the U.S. has been steadily coming down since inflation peaked about 2 summers ago, prompting this action today. And leading us off this hour, NBC News senior business correspondent Christine Romans, hot off the presses.
Yeah.
We just got the press release there in our hands. There were 2 choices, right? And this is the bigger amount that they could have chosen to lower.
Absolutely. There was a big debate about whether the Fed will cut 25 basis points or 50 because the economy overall is solid, and the Fed is noting that. But it is saying that 50 basis points is how much it will cut. Now, remember, it had raised interest rates 11 times and then kept them really high for a really long time in its effort to kill inflation. So inflation is on the right track, and the Fed feels like it is okay to take 50 basis points off.
Okay, wait. And if you don't speak basis points, what does that mean? It's 0.5%.
0.5. So that means it's lowering its Fed funds target, its target interest rate. And these are the things that your mortgages and auto loans and credit cards are pegged to or follow. It's dropping that target rate to 4.75% to 5%. So it has a little range. Look at the stock market seems to like it here because it shows that the Fed is being aggressive and trying to protect the job market. We'd heard the Fed chief in recent weeks say that now inflation was less of a problem, and the bigger concern was making sure the rest of the economy, especially the job market, stays strong. So that's why they cut 50.
Okay, but does this also signal by going, with a little bit more of a cut, does that signal that there are things they're worried about in our economy?
And that'll be the question that Jay Powell will get when he has a press conference in about a half an hour. We'll all ask him that question, every journalist, I'm sure, and he's going to. But when you look at the statement, they're pointing out that inflation is making progress, that the economy is growing at a solid pace. Jobs gains have slowed, but the unemployment rate is still slow. So you have this scenario where the overall economy is solid. Those rates had been so high for so long, the Fed wants to take that off.
So given this news, 0.5% decrease in the interest rate, how can we at home use this to our advantage? Mortgages, credit cards, is it time to refinance your house?
So it's going to be a better time to refinance your home. I just was talking to a homeowner who bought last December. Their mortgage is at 8.1. This is good news for them. But the Fed is expected to continue to keep cutting interest rates. So heading into the spring, you're going to have more and more opportunity to refinance those loans. Credit card and car loans, those are probably going to come down a little bit more slowly. But I would say if you've got a bunch of credit card debt, go ahead and call your credit card company and say, I'm paying on time every month, at least the minimum. Can you please lower my credit card rate? It's just worth a shot because these high interest rates are just not good for the family budget.
And this may be more complicated, but the cost of living obviously keeps getting more expensive right now. So what does lowering interest rates do to all the prices? Like, is it possible that we see prices creep higher again?
So prices will continue to slowly move higher. That inflation rate, though, is not that terrible 9% or the 5 or the 4. It's now closer to 2. And that's what economists think is more sustainable. I mean, in terms of the price you pay for something at the grocery store, you're already seeing some prices go down. Some hotel room categories are going down. Some food categories are going down. Gas prices are down a lot. 16 states gas prices are below $3 a gallon and expected to continue that way for Thanksgiving. So until Thanksgiving. So that's one part of the economy where you are starting to see some real relief on the inflation front. When you have borrowing costs go down, that's good for anybody who's borrowing money, small businesses, for example, that are borrowing money. A lot of people have adjustable rate mortgages that started to reset in the past few weeks, and they've been really freaking out. Now they're going to have a chance to maybe do some refinancing into next year.
All right, Christine Romans with all the breaking news. Thank you so much.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.